What's up, everyone? 360 in the house. Welcome back to the 360 Elite Trading course. This chapter, just like the last one, we're finally digging into the actual trade setups, how I find them, how I establish them, how to enter, where to sell, where to put your stop. It's the goodies. It's what you've been waiting for, and we are getting ready to continue with that in this class today. Today we're talking about the pennant or triangle trade. Last time we talked about the flag. And you know, one of the big things that people trip on is the semantics of flag, pennant, triangle, wedge, yada 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 yada. And most people don't use the terminology correct. And listen, it's really not, ultimately, I don't really care if you use the terminology correctly. Is there a right and a wrong way? Sure. What I care about is that you're able to identify the particulars of each type of setup, where you enter it, where the entry strategies are, where you would exit, how do you find your target, and there are some similarities in them. So you know, I don't really get bent out of shape if it's a pennant and you call it a triangle, or it's an ascending pennant and you called it a wedge, or it's a descending. I don't really get that bent out of shape. However, there is a right and a wrong. My classes do identify between what is what, so you should have the knowledge. But look, as long as you know how to make the trade correctly based off what you're seeing, I really don't care what you call it. It just really doesn't matter. The only thing that matters is, can you make this, can you use what you're seeing correctly? Let's just boil it down to that. That's really what matters. So we're talking about the pennant or the triangle trade. The pennant or the triangle trade. And you can see a very simple one right here on this slide. Let's go ahead and move on. All right, so what's the difference between the pennant and the triangle? First of all, they look pretty much the same. The difference between the triangle and the pennant is really their time frames and the expectations that you have when you see it. So this is how simple it is. The pennant is more of a shorter time frame, usually between 1 to 3 weeks, short term. And you see these usually after a large move, either up or a large move down. And it basically is a continuation type of a consolidation. The pennant is basically a continuation pattern. So if you see a pennant on an uptrend, your expectation is that this should break to the upside and should continue the uptrend. If the pennant appears on a downtrend, a strong downward move, the expectation is, hey, we have a pennant here on a short time frame between 1 to 3 weeks, that the downtrend should resume. So it's seen more of as a continuation type of a consolidation. Whereas the triangle, while it looks the same, it has that symmetrical triangle look to it, it's usually a much longer time frame and much larger than 3 weeks. Sometimes it could be a couple months even, and you have this massive, massive triangle. And it really doesn't matter what move happened before that triangle, because all you're looking for in a triangle is for either the top part of the triangle or the bottom part of the triangle to actually break to determine which way this is going. So it could go either way on a triangle. It could go up or it could go down. There's no expectation of whatever happened before it to do, because of the time frame has been so long. That consolidation period has been very, very long, medium term or long term. So it's really, a triangle is really there independent of what happened to it previously, and you should have no directional expectation. A pennant, because it's a short term on a strong move, there's an expectation that there will be a continuation. Hope you got that. That sounds so freaky. Oh, I don't want to have to say that again. So that's the difference, really. They look the same. One's a very much shorter time frame. One's a much larger time frame. Pennants usually 1 to 3 weeks. And they happen during bold moves, and your expectation is for that to continue. All right. So there are 3 basic triangle shapes or types. Notice, no matter how you look at it, the triangle or the pennant is symmetrical. And we're gonna look at this because a lot of people get these confused with wedges, and I'll show you how in a minute. Let's look at the top 2 right here. This top 2, that's like perfection. It's sitting the way it should be. It's perfectly sideways. It's a symmetrical triangle or a symmetrical pennant. And they're formed when the price makes both lower highs and higher lows. So because of its shape, these triangles can be either a continuation or reversal pattern. So again, a pennant is more continuation. We're expecting that move to continue. So that's basically the setup right here. It's very symmetrical. On a reversal, on a reversal setup of this type of triangle, you basically have the movement down into the triangle. This would be more or less the triangle break, and then it would trade upwards towards the apex, and then it would break out. That would be more the reversal. This you'd see from a triangle, not necessarily from a pennant. The pennant would be more of a continuation like this one. A pennant would come in, start to form these lower highs and higher lows, and then boom, it would break out, and you would expect it continue in that direction. So it's very symmetrical. It's facing exactly the way it should be facing, and the expectation for a pennant is for that previous trend to continue. Now, these are the ones that usually get confused with wedges. Why? Because they look like they're wedged. Let me explain something to you. A wedge, both lines would be going upwards. So see how you have this bottom line going upwards? On a wedge, this line would also be going upwards, and it would meet like that. But it's not, it's flat. See how it has this flat upper side, and down here it's got the flat support, flat resistance up top, flat resistance up top, flat support down bottom, and flat support down bottom, and you still have basically a perfect triangle. That is not a wedge. That is still a pennant. So this is called an ascending pennant or an ascending triangle because price continues to ascend higher. Price continues to ascend higher. And here price continues to ascend higher. That means it's making the same high and it's ascending, making higher lows. I really, really, really love this type of pennant during a bull market because it says a lot during a bull market. And what it says is, sellers are getting less and less. And remember, we talked about that wooden door getting pounded on over and over. The more that door keeps getting hit, and the less and less sellers there are. The door's getting hit and hit, but there's less and less sellers. This is a gorgeous pattern. It's one of my favorite type of pennants. I do like the symmetrical, but my favorite for bullish moves, if I'm going long, is definitely this ascending triangle right here. It's this ascending triangle. On a reverse, or this ascending pennant. On a reversal triangle, you have this move coming down in off of a bearish move, so it's downtrending, but it comes in and all of a sudden it's putting in higher lows. It's putting in higher lows and it's banging on that door. So here's a good reversal triangle. You see price coming in, but instead of continuing, it looks like it's heading up and then it breaks to the upside. So again, that's an ascending pennant or an ascending triangle. And down here is descending, or for the bearish move, continuation would look like this. This would be the bearish move. And it's starting to knock on that support door, but there's less and less buyers. So the highs are lower and lower. If you were shorting, man, this is a glorious, glorious way of shorting right here. Beautiful, beautiful method or way of shorting for sure. And then we have a reversal type right here, which is where price comes in on a bullish move, but it starts to make lower and lower highs, and it's kicking on that support door. It's kicking on that support door. Now, I do want to mention something about this particular pattern during the bull cycle. I have seen many of these descending triangles or descending pennants in Bitcoin turn out to be bullish. Why? Because we are trading in a known bull market cycle. Matter of fact, in January, Bitcoin literally developed this type of pattern, and that's why many people are calling for lows off of this. However, this is not necessarily bearish in crypto when you're in a known bull market cycle. So just because you see this on a cryptocurrency, and I do see this all the time, but I see this a lot breaking to the upside. Why? because we're in a known bull market cycle. So you want to be real careful saying that, oh, is this going to reverse because of where we are at with crypto. So anyway, we have symmetrical up here, ascending with the flat top resistance with higher lows. And then we have descending with flat top support with lower highs. And that basically shows you who's winning the battle between buyers and sellers is what that does. So very, very simple. They're not wedges. Why are they not wedges? In order for them to be wedges, both lines have to be going, in order for this to be a descending wedge, both of these lines would have to be heading down. In order for this to be an ascending wedge, both of these lines, this one's not, would have to be heading upwards to get your ascending wedge. That is the difference. And we will actually be covering wedges in the next chapter. So, as you can see, it's a little different from flags in the way that it looks. And a lot of people confuse this and call these pennants flags, and they're not. But again, as long as you know how to trade them, that's all I care about. All right, here we go. Again, I want to show it to you. This time you get to see it with the flagpole. So we have the bullish move come in. This is a bullish symmetrical setup. As you can see, it's a perfectly symmetrical pennant. Perfectly symmetrical pennant. You have the bull market or the flagpole coming in, meeting some resistance, coming down, coming up, setting a lower high and a higher low until it meets towards the apex. That doesn't mean it's going to always run towards the apex. It can, because you have this line, and you're looking for, because you have this bull move, you're looking for what? A breakout to the upside. The expectation is that a pennant will be bullish off of a strong bullish move in, off of a short-term thing. That it would be bullish in. On a bear market, same thing. This would be bearish. If we are in a bear market and you had a strong move in, you have the same setup, only this time you have lower highs, higher lows. Your expectation should be to the downside. So after the Bitcoin reaches its parabolic move, the cryptos have all hit their tops, their highs. This is what you'll be looking for on the way down. But since we're in the bull market, this is what we're looking for on the way up. And here down below, you can see the other version, the ascending, flat top, flat horizontal resistance. I love this bullish pattern because it gives you more information than this does, because you're getting a squeeze from the highs and the lows. But here, you're not getting a squeeze from both sides. You're getting a squeeze on the shorts. The shorts are pinching. And that wooden door keeps getting hit over and over and over and over and over. That's why when you see this setup, this is still bullish up here, but this is way more bullish. This is a much more higher probability trade because you're getting a lot more information. Sellers are getting weaker and weaker and weaker and weaker. And guess what else is getting weaker? That wooden door is getting beat, and then boom, it breaks. And remember, off of a uptrend coming into this, that's the expectation that that trend will continue, that wall will break. The reverse is true on the downside. Buyers are getting weaker and weaker and weaker. And that support door, that wooden support door is getting beat and beat and beat and beat until BAM! It breaks through. It breaks through. So bullish ascending, bearish descending coming out of the prior move. Gorgeous. Gorgeous, gorgeous. All right, let's go over the rules. So pretty similar to the flag. We want our flagpole to be developed with a nice strong move off of bullish volume, which we'll look at in a little bit. But you want that off of bullish volume. You know, you don't really want this nice ascension off of weakening volume. You want it off of good, strong, better than average volume coming into this, the development of this pennant. Then consolidation could either be symmetrically sideways or it could be ascending or descending, like we already showed you. This is symmetrical. So you have a squeeze of the high and the low to an apex. It's squeezing in, it's squeezing tighter. Tightening, I also call it the tightening of price action. When you see tightening of price action, usually that means some type of pennant. You'll hear me say that a lot. Ooh, price action is squeezing. Price action is tightening. And when you get that tightening, usually there's a boom! Like a spring, it coils like a spring until boom, it explodes and busts through that door. Remember, a pennant is generally less than 3 weeks. You get much longer than that, now you're talking about a longer term triangle. So which could have a different type of an outcome depending on how that chart looks. This is often confused with flags, wedges, and triangles. The pennant is often confused with flags, wedges, and triangles. By the time you're done with these next 3 chapters, you should have it square. You should know it. So we have strong volume coming in. We want generally weaker volume during this consolidation period. So I'd love to see a drop off of volume. You know, it should descend. And we will see that. I do have a picture with that in here. So we will actually see that. But I love to see this when this consolidates like this, I like to see that volume just decline or descend. That's a really good sign. And then, of course, what do we want on this breakout? Boom! We want that nice volume spike. We want this breakout on strong volume. If we don't get that, then this could end up being a false breakout. Could end up being a fake out, a head fake. I call it head fakes or a false breakout. So you want the breakout on strong volume, a good move. And then the flagpole determines your target on the pennant, just like it did the flag. The flagpole determines your target coming out of the pennant. And you remember, you need to take everything else into consideration. Other price, this you don't just isolate this and that's all there is. You still want to acknowledge your trend line classes, your horizontal support and resistances, because yeah, the flagpole may point to something, but you may have another horizontal support and resistance line that says yes, but it's gonna meet with some resistance here, and that's a great place to set scout targets and so on and so forth. So you need to take this into consideration, that flagpole target into consideration with your trend lines and with your other price action horizontal support and resistance lines that you've drawn. Don't read anything without all the rest. Put all these classes together. Do not isolate these classes. Put everything that you've learned together to help you. All right, and any gaps that you have, you know, sometimes you have a gap up. That gap is considered part of the flagpole, so it's counted. When you draw your flagpole, that's counted. That gap would be counted. If price skips price, you know, you still want to count that. The ascending pennant is the most powerful bullish pennant, and I told you guys why. You know, when you get that ascending pennant, that's where the top is flat. The top is flat, and this ascends into it. Oh, man, because it shows that the sellers are losing steam and that wooden door is getting beat. And the descendant pennant is the most powerful bearish pennant in the downtrend. The symmetrical is still good. It's not that it's not. But, man, that ascending one, oh, that's a bull, 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 bull. That descending one, that's a bear, 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 bear. Except, like I told you, in crypto world, I've seen many of the descending pennants work out to be bullish. Why? Because we have a Bitcoin, we have a known bull market, and that's an extended thing. So, all right. Again, I love drawings. I'm trying to give you a lot. Let's look at entries. So you have, first of all, you draw your flagpole distance, and remember the measuring tool that you have on TradingView, which I showed you, to measure your flagpole from peak to where that flagpole started. And then you put that towards the breakout point on the top of the pennant, and you draw that, and it gives you you draw that same distance. You flip this flagpole up here, you draw the same distance, it gives you a reasonable estimate for a price target on top of that pennant, just like you did the flag, right above this line. Now there are some that are really, really hardcore, and they start that flagpole right here, right above this peak, this resistance peak right here. So they would draw their flagpole from here. But they also start their flagpole from the previous breakout spot. So you have to determine how you're drawing your flagpole. Are you drawing it from the breakout of the previous structure? Or are you going to include the low of that structure? Because if you're including the low, you would draw it from down here, because it broke out from down here. So you have to decide what you're actually doing. And that would really depend on, are you trading the breakout, or did you enter that previous pattern on support? If you traded the breakout, you should be drawing your flagpole from where? The breakout spot. But if you bought this, here's your entry down here. If you bought this on support, then you can include that area down here on this flagpole. If I was to include the whole flagpole down here, but I was to enter on the breakout, then I'm really cheating by drawing the entire flagpole from the top portion, because technically I should have drawn the flagpole from here. Does that make sense? So be consistent on your drawing a flagpole. Did you trade the breakout down here? Then you need to put the flagpole starting at the breakout. Did you buy this on support down here? Then you can go ahead and draw your flagpole from this entry. So that's the difference. And you see you have 3 entry possibilities, just like you did with the flag. I can A, buy this on support of the pennant and get a nice early entry and make a much bigger profit on this breakout. Or I can buy the breakout. I don't know why there's 2 circles there. That's a mistake. It should be 1 circle right here. You can buy the breakout, knowing that this is more than likely going to come back and retest and then take its ride up. Or you can wait to see if it's going to retest, buy the bounce off of this support, and then ride it. So there's 3 entry possibilities depending on your risk levels. And here they are. Your, that should say pennant entry risks. I will have to change that. Your pennant entry risks, you can enter upon breakout, but know that it could retest that breakout spot. So you may have to sit on it longer. And we see that happen over and over. And it's okay. It's okay. You just have to be patient and wary that this could happen. Or you can wait for the retest of the breakout. So once it breaks out, wait for it to bounce back down off of that support and then go ahead and get in. However, know that you could miss the trade because there are many times when it breaks out and just runs and never comes back and tests. So there's the risk of that. Or you could enter at the support of the pennant. You could enter at support of the pennant, knowing that, hey, you're buying it towards the bottom. If the pattern breaks down, you're going to get stopped out. But look, that stop is literally minimal. The risk is tiny because you're so close to it anyway. So, I mean, it's well, in my book, in my opinion, it's well worth the risk, especially when you're in a known bull market cycle, to play it that way. Pennant volume. We talked about that volume. Look at this beautiful volume increase on this flagpole. And we have the, what is this pennant called? The ascending, my favorite. The ascending pennant. I love this one the best. It's very bullish. But we have this beautiful volume intake. Now, during this consolidation, look what happens to volume. I love this. This is like picture perfect, beautiful. This beautiful decrease in volume, which is the way it should be. And you have less and less sellers. And that wooden door keeps getting knocked out. And then look what happens on the breakout. Boom! Massive breakout. And we have our trend continuing. So this is an excellent picture. Look, it's not always this picture perfect pretty. You know, I've been looking at volume so long, I can look through the mess and the chaos and see whether it's in fact working or not. You know, this is picture perfect. It's not always going to look quite this beautiful. But you'll get used to it as the time goes on. This is a beautiful page right here. Also, we have this uploaded for you, this slide presentation. You can print it off if you want, so you have it. All right, gang, let's go look at some, shall we? Let us go look at some. All right, let's take a look at Bitcoin. I've got some drawn up here. I actually have a couple so you can see it. This one, remember last chapter, we had the flag. So I've got 2 on here so you can see both of them all at once. But let me enlarge this. All right. Let's get rid of that. Look at this. This is what we had last chapter, the flag. Now you can see the pennant. The pennant. Look at this triangle. Or this pennant. This perfectly symmetrical pennant. Or pyramid. Beautiful. Here's our flagpole. Right here. All the way to the top. So you measure that. You take that line. You put it up top. Look how perfect it worked out. Literally right to it. Here's the breakout. Decent green volume coming in. Big drop off here on this sell spike off of a trend line. Off of a fantastic trend line support. And then look at this breakout volume. Boom! Right here, we have this nice increase spike. You have a reasonable dip right here. So that's decent. We have a little bit of a decent, now I told you it's not picture perfect, beautiful. But you do have a little bit of a decrease. There's nothing crazy going on here, volume, that would lead you to believe that this is going to come undone. And then this right here was an indicator of some strength, this green bar. And then boom, shortly thereafter, you have beautiful, beautiful ascension of green. So this is a picture perfect, beautiful thing for you guys to look at because you get to see both. You get to see both. The previous chapter's flag on top of a pennant. All of these trade setups, listen. All of these trade setups that you're looking at are basically ways of defining what? We're getting almost all of our trades from what? Pullbacks and consolidations. Pullbacks and consolidations. And all we're trying to do is put these pullbacks and consolidations into one of our trade setups. And right now we have flags, we have pennants, we're going to have wedges, we're going to have fish hooks, we're going to have other things. But we're doing the same thing every time. We're looking at the pullback and the consolidation. We're saying, what does this look like? What pattern can I, what strategy shall I use? Do I use the flag strategy here? No, that doesn't work. Does a pennant work here? Yeah, pennant does work. Oh no, this will be an ascending pennant. Beautiful. Oh no, this is not that. This is a wedge. Beautiful. And because you know and you can work that in, then you'll know how to enter, where your targets are, where to exit. That's really all we're doing. We're basically channeling, we're honing in dips, pullbacks, consolidations, and we're forming them into our strategy, placing them into one of our strategies, booking it, coming up with our trade, and going from there. That is how simple. That is really how simple this is. All right, let's see what I've got. I think I had one on Litecoin. Let me find it. Yes, yes, yes. Let's go to the hourly. Bring this back. So there you go. Yet another example. And this one actually works out so pretty down here. So pretty. Look at this beautiful. Look at this beautiful flagpole. Bulls had control. I mean, you can look down here. I mean, bulls basically dominated and owned this puppy. Big spike. Then we get into it. We start forming this pennant. And look at the decrease in volume. Nice decrease in volume. Followed by our gorgeous breakout on volume. Look at this volume increase. Boom! Basically, we use the same flagpole. Remember, you can use this tool to measure your distance. And then once you have the percentage, you get the percentage of movement. Boom, you draw it up here. Or you can just draw the stick and move that stick up. Either way, however you want to do it. And look how perfectly this pennant worked out. I mean, to the T. Literally to the T, to the T, to the T. Incredible. I mean, it's very simple to see, very simple to do. Let's look at some more. Oh my goodness. Let's find it. All right. So we had a couple of them here. This is roughly drawn. Coming up, and see, it's not always picture perfect pretty. Flagpoles aren't always picture perfect pretty. They're just not. It's not always boing, and then here's a flag or there's a pennant. It's just not the way it works. They don't always that pretty. But you can see this little flag coming in here. It basically gave you your next jump. If you were to measure this right here, this flagpole, even on this little move, on this gigantic pennant, you got what you drew. You still got this move, and you got yet another pennant. And then boom, a huge breakout here. You can see volume supports it down here. Volume on this flagpole, decrease, and then look at this beautiful volume spike right here for Litecoin, or for Algo, for Algo. Absolutely gorgeous. Look at this guy. Beautiful volume. You guys should be able to see this. Volume. Descension of volume, and then ascension of volume. Boom, right there on that breakout. Pennant, flagpole. I mean, look, good Lord. Absolutely amazing, absolutely stunning, absolutely perfect. And then let's pull up, Had something to show you here on XRP so that you can see it. Here's an ascending pennant right here. Ascending pennant on volume coming in. Big volume spike right here coming in. And then we drop off. However, we have this ascension right here of sellers getting less and less as this door gets knocked on. Then we have this breakout on volume right here. We have nice volume heading up into this next flagpole. This worked out again beautifully on an ascending pennant. And then down here, we have a descending pennant. Again, XRP is not really the best to use for this because it's involved in so much crap. SEC stuff, so entangled. It's literally a very complicated thing. I just want you to see the pattern. Here we have the flagpole coming in. We do have a descending pennant here with a flat support where buyers keep getting less and less. The door keeps getting knocked on. That door does eventually break on that descending pennant. So that's pretty much it. It should be pretty easy for you to go out and draw these and find these. So now you have, when you're looking at consolidations, pullbacks, you now have flags, and you now have pennants to draw, to use. Remember the entries for them. Remember the rules for them. Remember the targets for them. Start drawing them. Start finding them. That way you can make better decisions when I send out these trade alerts. And you can go map it and draw it. And you can say, oh, I see he's got the safe entry here. However, I can buy this off of support and get a much higher percentage return, a much better percentage trade. So you guys have the ability now to take this lesson, these classes, and put them to practice, put them to use. So get out there, start drawing these pennants, start drawing these flags. Next chapter is going to be on the wedge, on wedges. And till next time, here comes the boom.